Hello and welcome to the weekly wrap video. Quite a busy week, particularly over in the US in regards to data, central bank decisions, as well as earnings. We'll start off chronologically. On Wednesday we saw the Fed rate decision for the latest month, where the Fed tapered their QE program by another $10 billion, which was broadly in line with expectations. The surprises really came alongside the dissension. So Fed's Plosser, who is a known hawk on the FOMC, actually dissented from the statement that low rates are appropriate for a considerable time, so that this may not necessarily represent the US economy's needs in the near term. As such, the markets have actually been looking ahead towards just when they expect the Fed could tighten rates, and this was brought forward by US GDP, which surged beyond expectations for the Q2 advance reading to 4% against expectations of 3%. As such, we saw a lot of downside in both equities and bonds on the back of potential less stimulus from the Federal Reserve. As we proceeded through the week then, and we transitioned from July into August, we saw a lot of long liquidation of the riskier positions across the month, prompting Thursday to be a very, very negative day for US equities. The S&P 500 fell at its fastest rate since February this year, with the Dow Jones falling over 300 points. This was exacerbated by some relatively negative earnings releases, primarily out of one of the world's biggest companies, ExxonMobil. And then, as we headed in towards Friday, all eyes turned to the jobs data from the US. The headline non-farm payrolls was still above 200,000, but well below the consensus expectations of 230,000. But there was particular attention paid to the average hourly earnings. These were flat month on month and up just 2.0% for the year-on-year figure, which was below expectations, really not adding to the theory that the Fed are really moving towards this rate lift-off section. As such, we did see a lot of upside in the bond market, some mild upside in equities, and the dollar did weaken pretty markedly against most other currencies. Emerging markets also gaining back a bit of vigour despite the knock it took earlier in the week off the back of the Argentinian default. So looking ahead in towards next week, it does turn a bit lighter in regards to both European and US earnings season as we head in towards August, which is likely to be continually quiet across the next 4 weeks due to the summer season, keeping traders away from their desks. So of course we'll bring you all those releases though that do come out next week as soon as they hit the wires, including the ECB and the Bank of England rate decisions. As always though, that's all from me. Make sure you have a fantastic weekend.